All right, let's talk about accounting's biggest mystery, debit and credit. Seriously, forget everything you've been forced to memorize because we're about to find out what these two little words actually mean. You know, if you've ever tried to learn accounting, you've probably had this exact feeling. It's just packed with jargon and definitions that feel foggy. You end up memorizing all these rules that just don't feel natural. It's almost like the system was designed to be confusing. But what if I told you it's not? Ah, yes. This is the classic head scratcher. Your business gets more cash. That feels like a good thing, right? A plus? A credit? But no, the rulebook slaps your hand and says you debit it. And that one rule makes thousands of people just want to throw the book across the room. It feels completely backwards. For years, we've just been told memorize it. Well, today, we're going to finally understand it.
What if the real reason it's all so confusing is just that we've forgotten the original story? What if the secret isn't buried in some thousand-page textbook, but it's been hiding in plain sight this whole time, inside two simple Latin words that started it all?
Okay, so in this first part, we're going straight to the source. We're going to find the original logic. And trust me, this is where everything is going to start to click. Now, a lot of people point to this guy, Fra Luca Pacioli. He's the one who standardized double entry accounting back in 1494. And yeah, he was absolutely brilliant. But the logic he was using, it's much, much older. It comes from the language of ancient Rome. And the problem is, in today's classrooms, we get all the rules, but we've completely lost the meaning. Are you ready? Because this is it. This one slide is the entire secret. Debit comes from the Latin word debere, which simply means to owe. And credit? It comes from credere, which means to entrust. That's all. To owe and to entrust. It's that simple. And once you know that, I mean, really know it, everything changes. Accounting stops being the strange set of rules that you have to cram into your brain. Instead, it becomes a simple, logical story about where value comes from and where it goes. It's a story of owing and entrusting. So, knowing that debit means owe and credit means entrust, well, that's the key. Now let's use that key to unlock the whole system with a really simple framework that's built on just 3 pillars of any business. And here they are. The 3 pillars are capital, assets, and profit. You can just remember it with the acronym CAP. Every single business, I don't care if it's a huge corporation or a tiny corner store, is built on the relationship between these 3 things. So here's how the story goes. A business always starts with capital. That capital is then entrusted to the company's assets, things like cash, machines, inventory. And now those assets owe a return on that trust. And that return, if all goes well, is profit. See, there are those words again, entrust and owe. Okay, let's put this into action. Let's look at the very first transaction any business ever makes. This is where the whole logic really comes to life. All right, so step 1, somebody invests money. That's the capital, into a new business. Step 2, that capital entrusts its value to the business, let's say, in the form of cash in a bank account. That cash is now an asset. So, step 3, what does that cash asset have to do? It owes the capital a return. It's got a job to do now. And right here, this explains everything. This is the first double entry. We credit capital. Why? Because capital is the source that entrusts the value. And we debit the asset, the cash, because that cash now owes a return. So let's go back to that question from the beginning. When cash increases, you debit it because it represents a new obligation, a new thing that owes a return to the business. It's not a plus or minus, it's a story of responsibility. And this is maybe the most important part of this whole explainer. This is not just some trick for the first transaction. This simple logic of entrusting and owing, it applies to every single entry in accounting. There are literally no exceptions. Once you see this, you see the whole game. And you can see this logic pop up everywhere. Income, that makes your capital stronger. So it's a credit. It's more value being entrusted to the business. Expenses, well, they reduce capital, so they're a debit. They represent value that is owed or has gone out. And what about liabilities? Just think of them as another type of capital, debt capital. It's money entrusted to you that you owe back, so it follows the exact same logic. It's all one beautiful, simple system. So this new understanding doesn't just make transactions clearer, it actually transforms that famous accounting equation from a dry formula you memorize into a story that you can actually read. We all learned this one in school, didn't we? Assets equal capital plus liabilities. And yeah, it's correct, but it's a little lifeless. It doesn't really tell you what's going on inside the business. Now, let's look at a much more descriptive version of that same idea. Now, I know it looks a little more complex at first, but trust me, this one equation tells the entire story of the business in a single line. So here's the breakdown. Your assets, A, that's all the stuff you have, are funded by two kinds of capital. There's equity, E, which is the solidified capital from the owners, and there's debt, D, the unsolidified capital from lenders. And what's happening right in the middle? That's the profit story, your revenue minus your expenses, or R minus X. See, this equation shows you not just what you have, but where it all came from and what it's supposed to be doing. So as we pull this all together, we can see that double entry accounting isn't just about making numbers balance. It's actually based on a really profound and very human idea. The big idea is this: double entry accounting is a contract of stewardship. It's a system that was designed to track promises. It's all about measuring how well the people running the business are managing the value that has been entrusted to them. So, if you forget everything else from today, just remember this one simple story. Capital entrusts value to assets. Those assets, which are managed by people, owe a return on that trust. And the measurement of how well they delivered on that promise, that's called profit. That's the whole system right there. And by the way, this brilliantly simple way of looking at accounting, the CAP framework, was developed by the fantastic team at Finotech Solutions LLP. They're all about cutting through the fog of finance to make it crystal clear for everyone. So forget left side and right side. Debit means owe, and credit means entrust. You now understand the true language of business. You're not just memorizing rules anymore, you're telling the story of value. So the only question left is, are you ready to play?